Good morning. Welcome to Money Talks, your intel on the Philippine markets and the economy. I'm Regina Lay. In the headlines today, the Philippines is still on track to secure that coveted A rating, says Standard & Poor's, something which new DOF Secretary Frederick Go says is proof of the country's strong macro fundamentals. But the country's largest business groups want mandatory lifestyle checks on all government officials amid the ongoing probe into massive corruption in public works. And a new Boston Consulting Group study shows 64% of Filipino families cannot afford a 10,000 peso hospital bill without borrowing or using insurance. We'll break this down with BCG's principal, Lance Katigbak, later in the program. Good morning. A bit of good news today. S&P Global retained the Philippines BBB plus credit rating, with outlook remaining positive despite the flood control scandal. In its latest assessment, the debt watcher maintained the country's BBB plus long-term and A2 short-term credit rating due to its above-average economic potential. Moreover, it said the Philippines remains on track to attain the coveted A rating if its fiscal performance strengthens and current account deficits moderate. Finance Secretary Frederick Go welcomed the move, saying a high credit rating will benefit Filipinos because this means cheaper financing for the government and, in effect, more resources for essential public services. While BSP Governor Eli Remolona Jr. believes the score confirms the central bank's view of favorable long-term economic growth prospects. Of course, last quarter's GDP was the slowest since 2021 due to the investigation into flood control corruption. If you recall, in Q3, public construction plummeted by over 26%, the steepest decline since 2011. But S&P Global says long-term economic growth prospects for the Philippines remain bright due to supportive policy dynamics and improving investment climate, and that the scandal should not derail growth. In fact, it fully expects the economy to bounce back as soon as next year. The debt watcher forecasts that GDP will drop to 4.8% this year, but from 2026, the gauge should jump back up to around 5.7%, with medium-term growth to average around 6.2% off the back of robust consumption and investment. But the country's largest business groups have come together again to issue yet another statement on the government's corruption probe. This time, they want mandatory lifestyle checks on all government officials to validate what they reported in their SAL-Ns, or statements of assets, liabilities, and net worth. The statement was signed by Makati Business Club, the Management Association of the Philippines, or MAP, Financial Executives Institute of the Philippines, or FINEX, and the Shareholders Association of the Philippines, or SharePhil. Other signatories include civil society groups, Justice Reform Initiative, and Institute for Solidarity in Asia. The group said without rigorous verification, SAL-Ns remain symbolic records rather than effective tools against corruption. While the recent Ombudsman decision restoring public access to SAL-Ns is welcome, transparency alone is insufficient. The collective pointed out that lifestyle checks are much easier to do these days by tracking digital footprints and social media activity. They also called on the public to remain vigilant and report signs of excessive or unexplained wealth among officials. The statement ended with, "The corruption we now see, we cannot unsee. We can no longer allow pilferage to prosper under the cover of pretense, political patronage, and public indifference." A new Boston Consulting Group study showed that 64% of Filipino families cannot afford a 10,000 peso hospital bill without borrowing or using insurance. The study, titled The Filipino Family, surveyed 1,500 families nationwide. The numbers get worse. It showed that only 9% of families can cover a hospital bill of up to 100,000 pesos. For bills of up to 300,000 pesos, only 6% of households say that they can shoulder it. And for medical bills of 300,000 pesos up, Only 4% of those surveyed say they can take it on, again without borrowing or relying on HMO. So not surprisingly, the survey showed that 7 in 10 households identified being financially prepared for health emergencies as their top priority, surpassing even savings, education, and home ownership. 68% say they prioritize having a large savings fund, and 64% are striving to improve nutrition and food quality. What this tells us, the authors say, is that family priorities are overwhelmingly defensive, aimed at preventing financial shocks. All right, to break down this study further, we're joined today in the studio by Lance Katigbak. He's a principal at BCG Manila. Good morning, Lance. Thanks for joining us all the way here.
Good morning, Regina. Thank you for having us.
Unfortunately, we have pretty sobering numbers to dissect here. Let's start off with the headline. A staggering 64% of Filipino families say they cannot afford a 10,000 peso hospital bill without borrowing. What's the story there?
I think the story there, Regina, is that I think for a lot of families, they really fundamentally feel that healthcare emergencies are something that are so potentially destabilizing for them. When we asked them, for example, what are your top fears? Everything was really centered around anything that could destabilize the family unit, whether that's inflation, losing a job, or somebody getting sick. And so we know that for a lot of people, HMOs usually tend to cover only the working, the healthier adults, and there's usually lower coverage for seniors and for young children. And so what we found in the survey was that, if you actually took away that HMO, a lot of people felt that they would be very hard pressed to cover a healthcare emergency.
Yeah. It's not surprising that many Filipino families are, as they say, one healthcare emergency away from financial ruin. We've known that for a while. But did the numbers surprise you when you did the study? Because this is the first of its kind, right?
Yeah, this is the first time we've run the survey, and yes, I think it definitely surprised me that the number was honestly that low, right? 10,000 pesos is, for some people, just a family dinner, right? But for a lot of people, it's the difference between, being able to survive a healthcare emergency. But I think the other thing to keep in mind, Regina, is that it's not just about them getting sick, but for many times it's also about their extended family getting sick, right? If your uncle, your grandfather, even a second cousin calls you because they're in a healthcare emergency, you are going to be pulled into that as well, right? And that's something that we don't often think about, but I think it's a reality that many families face, regardless of whether you are lower income or even higher income.
And it's very unique to the Filipino family dynamic because one of the other figures in your study showed that only 9% of Filipino families are single unit families, meaning they're by themselves, they're alone. Everyone else is part of a larger family mix. Talk us through that. And how does that compare to other countries?
Yeah, so what we found is that in the Philippines, as in many of our kind of neighboring countries, it's less than 10% of households, which means there's like 2 million households where there's just one person. And the vast majority of people live in one of three kinds of households. There's either one where there's just a single breadwinner, either it's a nuclear family or it's a single parent. A dual earning household, whether that they have kids or not. Or one of the other things we found is that the extended family, the multi-earner household, whether that's what you call a sandwich family, which is grandparents, parents, and kids, or even an extended family, which is that same thing, but with a cousin or an uncle. Most Filipinos, we found, are living in these kind of extended units because in some way that's kind of their health insurance plan, right? If one person gets sick, at least you have other people in the house who can help work or who can help cover. And so we found that a lot of families were staying in these type of extended households to kind of support each other.
What seems to be the crux of the problem here? Is it that obviously we know that the healthcare industry is in crisis at the moment. So that's part of the problem. But what is the crux here? Is it that Filipinos don't know how to save? Is it that they, as you said, they get roped into other people's problems? Is it that they can't rely on HMO and it's not covering enough of the market? What seems to be the crux here?
Yeah, I think there's a couple of factors that play into that. I think the first one is really the fact that wages have grown slower than inflation, right? The things become more expensive, but for a day laborer, they're making the same rate 2 years ago, 3 years ago as they are making today, even as fish, rice has become more expensive. I think the second thing is these deeply Filipino family norms and values, exactly. If your mother calls, your grandparent calls, you can't say, no, I'm not going to help you.
Yeah, it's so hard to say no.
Regardless of what they're asking for, right?
Yeah.
And I think that's something else that we found. And third, I think we still see this sense of a lot of kind of anxiety, a lot of fear of the unexpected. And so we find that as a result of that, families are deciding to put off longer term expenses.
Right.
They're not able to make as much progress, for example, on saving for a home or buying a car or a motorcycle, because they're so focused around building this kind of safety net around, just in case something happens.
Yeah, exactly.
But if wages, again, are growing slow, then the ability to build up that safety net, it also becomes a little bit more challenging.
Right. Kumbaga sa Maslow's hierarchy of needs, they can't progress because they're constantly trying to cover their bases. As you said, you can't move forward to purchasing a car, for instance, or purchasing a home, or even planning for a trip,
Yes.
right? Let's look at the top 3 priorities that the people that you surveyed said was on their list. All of them centered on financial stability again. Let's take a look at the numbers there. 70% say they want to be prepared for financial emergency. 68%, well, I can't read it right now, but
Large savings fund.
there, that's it.
And then-
Having a large savings fund, and 64% improving nutrition and food quality. Again, those are very basic needs. What's the story there?
Yeah, I think there's one interesting finding that we saw, which was that I think when we presented this to people, we asked them to guess what do you think the top priorities are. Oftentimes, the number one guess is education, and I think a lot of people were surprised. Hey, education is no longer in the top 3,
Yeah.
and I think there's perhaps a reason behind that. Tertiary education has been free for the last few years, and so I think that's been one of the big shifts we've seen. Is that education is obviously still important, but families are kind of thinking a little bit more about health. I think the second story here is really, if you think about the pandemic, it's been several years since the pandemic. But what I think we feel is that during the pandemic, everybody probably had some kind of experience that was where either they had a healthcare emergency or somebody close to them had a healthcare emergency. And I think there's a little bit of that trauma still, that shock of what happened during the pandemic that has not yet quite left the Filipino psyche. And it's also quite consistent with a survey we ran last year when we asked people, what is your dream? And the number one dream was quite consistent. It was, I want financial security to absorb health scares.
Which is shocking, to be honest, because where's home ownership in that mix, right? Where's education, as you said? Where's building a nest egg for their children, for instance? The Filipino consumer market must be viewed through the lens of the household as a deciding unit, is one of the other things that you say in your findings. What does that mean?
Oftentimes, if you look at how many businesses approach the day-to-day business, it's very much about the individual consumer. They assume that people make decisions. Maybe as one example, if you sign up for a loyalty card, it's always for one person. If you open a bank account, it's usually for one person. You can do maybe a joint account, but it's usually there. Everything is about the individual. But I think if you take a step back, right, and think about even your own family or the families that you know, we all kind of intuitively know that people make these decisions together. They consult their families, they ask their parents, they ask, what should we do?
And in fact, one of the first answers you often hear is, let me ask my family, or let me check with my spouse or kids or whatever, right?
Yes, exactly. But I don't think business has quite pivoted to align with the way that families actually make decisions, right? For example, why is it that grocery loyalty cards are only for one person instead of one family? Even if we know that, at least from our study, multiple members of the family decide what goes into the grocery card. Or, for example, we all know about ambag or toka-toka as means of managing money in the household. I haven't seen a banking app yet that allows you to have an ambag or a toka-toka.
No, that's a good point.
Right.
Yeah.
And again, it's like this is how we live, this is how we talk, but it isn't how our banking apps are designed.
Right. And that's inherent within the Filipino family dynamic. And by the way, when you did the survey, so it surveys 1,500 households nationwide. Did you was there a good cross section of people across socioeconomic classes, or did you just focus on a particular socioeconomic class?
No, the survey was nationally representative across age, income, urban, rural split, and even family size.
Oh wow!
So we tried to make it as representative of the Philippine population as possible.
Even then, it's still 64% saying they can't afford. Last question: what can the policymakers take away from your study? What do you want them to take away from this study?
I think for me, the big finding really here is to put the family at the center of everything that we do. We often think about individuals. We often think about what is good for one person. But I think it's important to think about what's good for the family. But I think more than that, it's good to think about what is good for different kinds of families.
Right.
The way an extended family, lola, two parents, kids, tito and tita, the way they act is going to be very different from a nuclear family with one earner.
Right.
Where the parents maybe split the labor. And again, they have very different needs. And then you add the solo parents who
Yeah.
are trying to juggle everything on their own. You add the dinks, the dual income, no kids,
Right.
who are just trying to get by, right? Like
It's the best lifestyle, though. Dual income, no kids.
with a dog.
Right, exactly. But before we end, I just wanted to show the survey cover page and this is the Filipino Family Survey conducted by BCG. Lance Katigbak is one of the authors of this one. Can people get a hold of this? Anyone who wants to get a copy, they can just come to you and say, give me a copy. Or is it available
It's
online?
available online. If
Okay,
you
great.
search BCG, the Filipino Family, in a search engine,
Great.
you'll find
Lots of good nuggets in there. Very sobering statistics that I hope the policymakers and businesses take note of. But we will leave that there. Thank you so much for
Thank you,
coming
Regina.
here and talking to us about it. That was Lance Katigbak, Principal at Boston Consulting Group in Manila. We're just going to take a very short break, but coming right up, another new report, this time by Gobi Partners, which says the Philippines can capitalize on the next wave of innovation in AI and digital transformation. Carlo Chen Delantar will tell us why. Keep it here in One News. Okay, welcome back to Money Talks. I'm Regina Lay. Let's take a quick look at the markets before we move on to our next stories. U.S. futures, little change in after-hours trading. Let's take a look. The Dow, the Dow, S&P, and 500 and Nasdaq, all pretty much flat at the moment, all up by just 0.1%. And also that's because the U.S. markets were closed Thursday for Thanksgiving holiday, and Friday's trading session has also been shortened, so no surprises there that it's been a quiet trading day. Asian markets are looking like it's a bit of a mixed bag as well. Oh, look at that. The Kospi down by 1.2%, whereas the ASX and the Nikkei 225 more or less trading flat at the moment with a lack of very strong catalyst at this time. Let's take a look at our own Philippine markets. PSEI has opened this Friday marginally higher by about 1/3%, sitting at 5986.50 at the moment. Of course, the stock market took a breather yesterday by over 0.5% after investor sentiment softened over Fitch's recent warning on potential risks to the country's credit standing. But as we just reported today, S&P saying that the that the economy should not get derailed too much by the flood control scandal. As for the Philippine peso, it's also opening a tad stronger at the moment, sitting at 58.73 to the dollar. Peso rose by 8 centavos to close at 58.76 against the greenback yesterday amid growing expectations of a rate cut. And then, of course, the 10-year government bond yields, ticking up to 5.923 at the moment, just marginally higher from its last close. Okay, we've got another new report for you, and this time it's from Gobi Partners that shows there's been a cooling startup funding climate, but also a major shift toward AI, fintech, and digital transformation in what it calls the Philippines' next wave of innovation. To break down the key findings, we're joined today by Carlo Chen Delantar. He's a partner at Gobi Partners. Morning, Carlo. Thanks for being with us again.
Thanks for having me. Good to see you again, Rich.
Well, first of all, let's talk about who Gobi Partners is. It's primarily Philippines-focused venture capital fund, right?
So we're a Asia-focused venture capital firm. We've been in the game for about 22 years.
Yes.
And we have multiple funds, including the Philippines, and we invest anything specifically in technology, and we believe in innovation without boundaries.
Fantastic. And this latest report that you put out found that 2025 was a much cooler climate for startup funding, which came as no surprise to me, to be honest, because it has been really quiet on the on the fundraising side. But to rattle off some numbers, we're looking at total capital raised falling 32% and deal volume down by 54%. Talk us through those numbers.
That is correct. So I think the last time I met you last year, there was a high uptick of amount of deal value, but then the deal volume was even a bit higher. But the reason for that was a lot of larger scale-up startups were actually raising to grow bigger. But this year, especially with the AI wave, majority of the question was where capital should be. If the Western and Eastern states are looking into AI, where does ASEAN look at? And now you look at the Philippines, plus all the current issues that's happening geopolitically and politically, it has created this slurry of a pot where we're trying to figure out where deal value should be. But the ones that are really strong and steadfast right now are the profitable scale-ups.
So a lot of investors held back thinking, oh, let's wait and see how this AI transformation unfolds. Well, how is the Philippines positioned in that landscape?
I think it's the same with ASEAN at this point. Talent in a way is fairly limited and fairly niche at this point, and everyone's trying to figure out what does AI mean for their economy. What we're seeing in ASEAN, and slowly we're seeing a lot more policies in the Philippines, is really built on what does AI need to create that infrastructure. So the most important one here would be data sovereignty. Data should be processed and only be computed within your own country. So now you have data centers, renewables. So majority of that now are heavily and quietly being invested by a lot of the conglomerates here. But on top of that, with an archipelagic state, electrification and just internet connectivity is still not there. So there's a lot more to do there. And that's just the intelligent era or the intelligent age, which we're talking about the fifth wave of innovation. Before that was the digital side, right? So now we have to leapfrog onwards.
Also, we're no longer in the digital era. We're now in the intelligent
We're
era.
leapfrogging fast because we need to make that competition. We're not just competing with the digital startups. It's now global companies that see no bounds because you can just go directly now.
Do you think the Philippines has I know there's some issues, as you pointed out, but do you think the Philippines has the right ingredients to carve out a space in this AI revolution?
100%. I think we've looked at a lot. We look at deals every single year, and we have to revisit some of our deals because some of new business models are changing, and it might work now, especially on productivity, lesser manpower, and actually the accurateness of how AI is doing. So I think best examples here would be agri, healthcare. Healthcare is the amount of paperwork that's been done and how to actually find the right profile and insurance faster and way better.
We were just talking about it with the BCG principal, Lance. And in fact, when I looked at your report, the sectors that you said that look promising, that are poised for transformation, there are four. You said fintech, logistics and health tech, creative, and BPO and knowledge services. Talk us through that.
I think it's at the end of the day, it's question of fundamentally, if you are a business, where do you put your allocate your resource, and how do you create better efficiency? And some would say, especially if you're private, bottom line, right? So there's an interesting balance, especially with the two you mentioned, BPO and creative, right? I think the Philippines is heavily on a service industry.
Yes.
So how do we make sure that they're being upskilled over time? Because right now, a lot of BPOs, we're seeing more of them transcribing and supporting the AI transition. But the real question is, how do we
But that's low-level tasks.
Low-level tasks, yes. But now, so the upskill is very, very important. So how do you make sure we believe that in the tech ecosystem, the most tech-native talent actually comes from BPO. So we can welcome them within the tech industry, but we want to make sure that there's room for everyone, right? So that's because, and very, very interestingly enough, the average age globally for AI-driven founders is actually below 25.
Yes, I know, it's very young.
Very, very young. So now, when you look at AI hackathons now, a lot of them can create a working prototype, and they're just like straight out of college, and that's an interesting
you
part.
extrapolating that with the Philippines' demographic, wherein we're also very young age,
Very,
and you're
very
saying
young.
there's an opportunity there?
100%, yes. And we're one of the top users for LLMs, ChatGPT or Gemini. So I'm excited on that part because now we're immediately decentralizing what it means to be a successful founder. And that's one of our things too with the report is we've surveyed over 50 founders, and we wanted to understand what the blueprint is to be invested. And that's something that has been doing really well. And really, this report is a service to the startup founders, and hopefully they get more investments.
As a VC fund, when you look at the landscape of startups in the Philippines, what's looking interesting to you? What's standing out? And again, is there enough activity? Is there enough innovating in the AI space?
Okay. So for the ones, for startups that have gone funding, majority of their investors are saying, okay, use AI as a way to increase your volumes, get better margins, but at the same time, be way more efficient. So there's a lot of restructuring, figuring out what that looks like. For new deals, we have to look even further. It's like, are you AI first? And if not, the question now is, do we wait and see? So where we're seeing next steps would be, we're seeing whatever's happening globally would be AI applications. Right? Because if you look at the layers of LLMs, agentic AI, compute, everything will be done by West or East. So how do you apply that to the Philippines, and how do you make sure you attend to that market? So it's going to be really, really fast, and it's probably one of the fastest cycles we've seen the past 15 years.
And are there enough organic startups here that are looking, that are innovating in that space, or it's mostly still overseas startups that have set up branches here?
Majority, I would say, that are really strong would be the regional ones.
The regional
because
ones,
they do
right.
see this as a market. So what we do with this report is say, hey, these are things happening. Let's use the time machine method. Let's bring all these use cases so you can just have a better leg up to really compete in this space. And that's what we want, nation building.
Right,
Yeah.
exactly. And but then I'm sorry I have to ask you this,
Yeah.
but has the whole this massive corruption scandal tainted the image of the Philippines as a startup destination in any way?
I think in Southeast Asia, it's the same thing as Indonesia, Malaysia, Myanmar. The Philippines is no saint, I guess, in that sense. But we have to be steadfast and see this as for a momentum. So yes, it has affected. But the most welcome thing that has happened the past week has been the suspension of the LOA. It's very, very important.
The letters of authority by
Yes,
the BIR.
correct,
Okay.
yes.
Why is that important?
If you look at ease of doing business, we're one of the most hard
Yes,
places to
yes,
do.
still.
So the lowest, the fact that you're expected to do it every single year when you're supposed to be growing as a startup and the investments come in, it really takes the time and growth within these startups. So I hope they modernize LOAs, but at this point, it's a very happy. It's very
It's a
welcome.
very welcome development.
Yeah.
We'll make sure that they close the loopholes in that LOA, because as the BIR was explaining to us, it didn't start off as an insidious thing, right? It started off with the right intentions, but of course it got weaponized in the end. But we shall leave that there. Thank you so much for talking to us, Carlo Chen Delantar, partner at Gobi Partners, a venture capital fund. And that's all we have for Money Talks today. I'm Regina Lake. Catch us again on Monday, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great weekend ahead.